would love to understand about GoodScore. If you can paint a picture of who our ideal customer is.
Typically, these people have taken a lot of loans over a period of time and have generally 6 to 7 active loans and credit cards. A lot of these people go through some financial shock at some point in their life, which leads them to default. And most of them who come to us are generally defaulting on 2-3 of these 6-7 loans that they have.
What are these triggers for default?
The primary trigger for default is some financial shock. These are people who are normally earning around 35 to 40k a month, and when you have multiple liabilities, even a single shock running into a few lakhs can make things go haywire for you and you start defaulting.
And Sanchit, give us a broad sense, how large is this segment?
Quite large. In India, there are 350 to 400 million people who have any sort of bureau footprint, and 90 to 100 million of these people have defaulted.
And you spoke about solving the problem, because if the lenders' collection agencies are not able to collect or drive credit payback, then how is it that we are able to do so?
Let me first quote specific examples.
Sanchit, I've had the good fortune of knowing you for now 13 years, right from the time in 2011 where you were graduating out of IIT Delhi, had an admit for IIM Ahmedabad, and here you were interviewing with a no-known startup in Delhi, which was a fascinating, at least, thing to learn about you, because often who has a IIM Ahmedabad admit, I think just has blinders and goes to IIM Ahmedabad. And then, our next conversation happened in 2014 when you graduated out of IIM Ahmedabad with a pre-placement offer with a Wall Street bank, who one can argue is dream jobs for many students there. But you decided to decline it and take the path less taken, especially at that time, which is to become an entrepreneur. And you ran your first company, from 2014 to 16. And when it did not fully work out, you decided to give it another attempt and start a second company. And that too during the tough times of 2016-17, where funding was quite tight. And then I think the next set of conversations we had was early 2020s, when I think you wanted to start your own company, and you went through a long 1.5 year ideation journey. And I was a part of several of the ideas that we discussed at that time. And Sanchit, then of course, I know in confidence that, for an idea that you were contemplating, a VC had given you a term sheet, and you didn't have the full conviction, so you in fact declined the VC term sheet, which of course takes a lot of courage. So, as I connect the dots through the last 12-13 years that I've known you, I think you've demonstrated courage, flair for entrepreneurship, and I think very bold decision making. So what has led to this?
Thanks Mayank, for having me here. I think coming from a Baniya family, you normally see businesses growing up. So it is not unusual to think of starting a business. I have been surrounded by a lot of people, my cousins, my uncles, who have always been in business. I think when I was graduating out of IIT Delhi, 2011, 2012 was that period when Flipkart was quite popular and people had started thinking about startups. So maybe the seed was sown at that time, and then over the next couple of years, as the ecosystem boomed, it just felt that this could be something which I like more than, say, pursuing a job. So at that time, I think there was this urge to try out something and hopefully make it big. So it has been there ever since. Amazon was a very good period where I could build a lot of operating experience, get experience of how things work at scale, and consciously wanted to spend some time at a place that could give me the necessary mental models on how to scale things if they do start working. And as I felt that I've learned enough, sort of decided to take the plunge again and started GoodScore.
I think you were there at Amazon for over 5 years, heading the ads business.
Correct. I was leading large parts of product for ads there. Over 5.5 years spent at Amazon.
So, let's move to GoodScore. Would love to understand more about GoodScore. Maybe starting off, if you can paint a picture of who our ideal customer is, that might be a good starting point.
Sure. So, Mayank, our ideal customer is someone who has had access to credit over a long period. Typically, these people have taken a lot of loans over a period of time and have generally 6 to 7 active loans and credit cards in total. Interestingly, a lot of these people go through some financial shock at some point in their life, which leads them to default. And most of them who come to us are generally defaulting on 2, 3 of these 6, 7 loans that they have. And normally, it has been a while since they started defaulting, over 6 months, 12 months. So it's been a while. And after going through this entire period of defaulting, financial shock, people have started recovering, people start to recover, and now there is a very strong intent to come back on track again, build a good profile back again, so that they can lead a good financial life, and that is where we come in for them. So that is broadly the customer segment we are after. Very credit active, is slightly savvy as well, has taken fintech loans, know how to use apps, have defaulted due to some unfortunate circumstances, and now have a high willingness to get back on track again.
Very interesting. So, customers who were credit worthy in the past suffered a financial shock, lost the capability or the ability to pay back, but carry the intent to pay back. And Sanchit, give us a broad sense, how large is this segment?
Quite large, Mayank, quite large. In India, there are, as per multiple estimates, around 350 to 400 million people who have any sort of bureau footprint. And going by some recent statistics, about 90 to 100 million of these people have defaulted. So it's a fairly large market of people who have defaulted, and a large percentage of these, as they go through defaults, they realize that it will be very hard for them to get credit again if they do not improve. So over a period of time, a bunch of these people start becoming very similar to what our ICP is, and a very large market for us to go after.
At least as investors, one of the very attractive things about what we are building is at least the ICP that we are going after is very, very unique compared to other players in the market. And also the severity of pain point of this ICP is very, very high. Both this ICP as well as the lenders who they have gone delinquent on. So that is in fact a very, very interesting part of our business. Would also love to understand that typically, what are these triggers for default? And with the bulk of our customers, is there a lack of intent to pay, or is it predominantly the lack of ability to pay back?
See, so there are, by and large, the primary trigger for default is some financial shock. These are people who are normally earning around 35 to 40K a month. And when you have multiple liabilities, even a single shock running into a few lakhs can make things go haywire for you, and you start defaulting. So that is normally the pattern that we see, not really intent led, but more capability led, and inability to manage cash flows effectively because of the way their lifestyle is. So along with capability, I think there are some other nuances as well. While they default due to capability, it is not easy for them to figure out how to really pay back after a period of time. Typically, when they start defaulting, collection agencies start hounding them. They get anywhere between 40 to 50 calls a day. And at that point, people get frustrated, they throw away their SIM card, uninstall the apps they took loans from. And people are not organized enough to figure out where did I default and how should I pay back once there is actually some capability to pay back. So because of these multiple reasons, these people continue to default. But at a high level, it's largely capability led as opposed to intent led.
Understood. One of the things that you mentioned in your talk track is that they want to get back on track after the 6-12 month period when they start recovering. Do they have awareness and enough appreciation about credit score, advantages of building, one's credit score?
So things have changed dramatically with respect to this particular dimension over the last 3-4 years. If you go back maybe 5-6 years in time, 2018, 2019, maybe Paisa Bazaar was the only app telling you about your credit score. If you see today, Paisa Bazaar, GPay, PhonePe, Paytm, there are like 3-4 other apps having 100 million downloads that tell you your score. So it is ubiquitous. Any financial app will tell you your credit score, and people have that awareness. Second, COVID was a very big shock for a lot of people, and after their credit profiles went for a toss, a lot of them realized the importance of it and how it is very important for them to maintain. Third, I think overall a lot of fintech apps have taken off largely in this period, last 4-5 years. BNPL took off, and as these things started getting reported to bureaus, people started understanding that credit score is something important and they should maintain it. So we have seen a tremendous increase in education and in general a high level of awareness with respect to credit score that RTG has.
I was speaking to a user the other day. During COVID, their neighbors needed a healthcare loan for a COVID-related emergency that happened in their household. And this user told me that, that drove, his appreciation for credit score. Because they had a good credit score, they could get a healthcare loan at a good price. And at least he then, understood and appreciated that. And I'm sure COVID served as a catalyst for a lot of such positive and negative experiences that must have happened. Sanchit, would love for you to give an overall commentary on the GoodScore solution to solve for the ICP that you just outlined.
Yes. So GoodScore, basically we have devised a step-by-step journey for people to recover. Recovery is normally not a 1 or a 2 month journey, it's a slightly longer journey. So we have devised a step-by-step journey for people to eventually come out of it and get to say a credit-worthy score of say 750 plus. So that's what we do. It is broadly a 3-4 step journey. Starts off with credit advisory, where what we do is we analyze their report and other data sources and try and give them a good deep dive on what all have they done so far in their credit lives, what went wrong, what went right, and how can they improve going forward. We leverage a lot of AI in this, and using this AI we create YouTube-like videos that people can consume at will. So that is the first important leg in the journey, where we try and educate them, and not just upfront but on a continuous basis, so that they can figure out whatever improvements are happening over time due to their actions. The second important step in the journey is to actually help them pay back whatever dues they owe to lenders where they've defaulted. So here we work closely with lenders across banks, fintechs, and BFCs, and try and get people some waivers and some flexibility to break down larger chunks into smaller repayment schedules and pay back over a period of time. So for example, someone having an HDFC credit card default of 1 lakh rupees, we will help them pay it back in 5 installments of 20,000 each. That makes it very easy for people to come out of this, because typically overdue amounts balloon up significantly over time and it's not easy to pay back in a single go. And the third important leg in the journey is just overall credit management. As I described earlier, these are people who are fairly credit active, 6-7 active loans. They do have a lot of ongoing loans where they want to make sure that they keep paying EMIs on time. And even if they miss one EMI by a single day, it sets them 6 months back in time. So it is extremely important for them to keep a very close and diligent track of all their liabilities and make sure they pay everything on time. So we help them in this regard. We have consolidated all their liabilities in a single screen and make sure they are able to track it effectively, pay it all back from the app itself, to make sure that they never really lose sight of the credit overall.
Coming back to our advisory offering, you spoke about a YouTube-like video. Is this, a generic video which does a walkthrough of how a credit report looks like, what it means, or is it very personalized to a user?
It is hyper personalized, and so the way it works is it will talk to you as if it is talking about your report itself. So it will tell you, Mayank, these are the 3 cards that are there on your profile. For this HDFC bank card, you have paid last 5 dues on time. You missed your due in September of 22 by these many days, and because of which your score went down. And going forward, these are the things you should do to make sure you basically keep paying on time. So it goes to that level of depth and talks about each and every credit account and associated problems that we identify. Another interesting thing that we've seen in the Indian market is that a lot of fintechs tie up with NBFCs, but when a user sees their credit report, they only see the NBFC name. So, for example, you are using Amazon Pay Later, you will see Karur Vysya Bank on your credit report. Now, people in North don't know of what is Karur Vysya Bank. It's very hard for them to understand. We tell them all of this, that look, this is something showing up in your report. This is actually Amazon Pay, and you have missed something here. You should go back again and pay it back. So it's hyper personalized, available in 5 languages: Hindi, English, and 3 South Indian languages.
Very interesting. And Sanchit, basically, you're saying it's like an expert human giving a walkthrough of the user's credit report. And is this fully AI generated or is it human generated?
It is fully AI generated. We have developed in-house algorithms to parse lots of data and create these videos using AI.
Understood. You make a very interesting point about a customer taking a loan from a fintech and not knowing who the backend NBFC or lender is, and at least this is something which has proliferated over the last 5 years. The small ticket personal loans provided by fintechs, they are in fact the largest in terms of volumes. So I can very well imagine this being a very large use case and not a fringe use case. The example that you spoke about.
Right, very large use case. Before I started this company, I remember seeing my credit report for the first time, and being at Amazon, I used to use Amazon Pay. I myself had no clue why are these things showing up on my profile. So I can imagine it's how confusing it can be for people at large.
After the advisory, you spoke about credit payback, which is for somebody who wants to get back to track, is delinquent on loans, is potentially being hounded by multiple collection agencies. So that, of course, becomes a here and now problem. And you spoke about solving the problem. Can you give one or two specific examples? Because if the lender's collection agencies are not able to collect or drive credit payback, then how is it that we are able to do so?
Yeah. See, there are multiple dimensions, and let me first quote specific examples. Just the other day, we got a user anecdote. This person paid through us largely because he felt that the bank agents and the collection agencies were extremely rude to him all this while. And it is expected. Collection agencies work on targets. They do not care about customer experience. So all that matters to them is how can they get a customer to pay back. So language is never really a concern for them. And this person explicitly called out that if a bank agent gets involved in this process, I will again not pay. I am only paying because of the way I have had experience with GoodScore. Another example, this person had 2-3 overdues with HDFC Bank, couple of loans on credit card, and then he got to know from GoodScore that his housing loan application got rejected because of these overdues. It was not intuitive to him, it is not intuitive to people at large, and a collection agency would never have this information. So he understood this, it struck a chord with him, and he paid back all the 3 dues in a single day. Another example, so typically what happens in large overdues is people, as I said, people don't have the capacity to pay back in a single go. Now, collection agencies are not that patient. They would ideally want you to pay the entire amount in one go or get you to do a settlement, but basically get whatever money they can in one go. But we normally structure it in a flexible repayment schedule. We convert it to 4, 5, 6 EMIs depending on the kind of loan it is, and that is exactly the reason why this person paid. He was not given that option earlier. He was not aware such an option existed. But when he got to know about this through GoodScore, he was happy to pay it back.
Very, very interesting set of examples. And the other day when we were speaking, I think you were also talking about an offering dedicated to self-employed people who earn on a daily basis. Do you want to talk about that as well?
Yes, it is still in early stages, but we are quite excited about it. So for people like us who earn a monthly income, it is easy to manage monthly obligations because we can set aside money in one go and pay it. But for people who earn daily, like a normal, say, self-employed SME, shopkeeper, or say people who earn weekly, it is very hard for them to manage these monthly obligations. So we have a product where they can pay back these smaller amounts over higher frequencies, daily, weekly, and eventually build up whatever corpus they need to build to manage these monthly obligations in a better way.
Very interesting. So you're aligning with their cash flow or earning cycles with the credit payback cycles.
Absolutely.
Very interesting. You spoke about the step 3, which is ongoing credit management, specifically for this customer, who has 7 potentially active loans. But isn't, this an offering which, other players in the market, CRED included, solving for? I'm trying to understand, why is this a gap in the market if other players are solving for this already?
So I think a couple of things here. One, CRED goes after a very different audience. These are people who are normally, I think there is a sort of complete mutually exclusive audience between CRED and us. Could be some overlap. These are people who are highly savvy, know how to manage their credit themselves, have multiple credit cards, and use credit as a payments app as opposed to, say, credit management. Second, it is very credit card focused, whereas if you see the Indian market at large, credit card penetration is still very low. For liabilities, people refer to loans more than credit cards. So that is where the difference lies. One, it's a very different segment for us. Second, nobody has taken a view on overall liabilities in total, and things have largely been credit card focused, which is a very small portion of liabilities for a large part of the audience in India. So that is where credit management becomes important. We consolidate everything in a single place, which not a lot of people have tried so far.
The other thing, at least I believe in, is that the severity of credit management increases with the increasing number of loans that you have, which of course for us is close to a 7, compared to, for a credit card holder, it is much lesser active credit cards that they hold. So at least, does feel like the severity of credit management for our customers is a lot higher than our typical credit card holder.
Absolutely. And it is, see, the way loans are disbursed, they are quite rigid. The payment mechanisms are quite rigid. For example, if you have an auto pay set up on a loan, auto debit, and if your bank doesn't have enough balance on that day, you will end up missing that EMI and it will hurt your credit score. And there is no option to actually pay it back on that day through some other mechanism. So we have seen an interesting behavior. People who understand this nuance actually use our app to prepay the loan before the auto debit date, because they are not sure what will happen on that day. You've seen many such anecdotes. So credit management is actually a thing once you start taking account of all these liabilities, more so loans, because they're quite rigid the way these systems are set up.
Also, maybe give some examples of the credit management features that we have, whether it is reminders, so on and so forth.
Yeah. So I think first is just consolidation of everything in a single place. They can see all their due dates, EMI dates, and pay it all back from the app itself. They of course get reminders on all channels to make them aware of when the due dates are coming. Second, in India, a lot of information that is reported to bureaus is not always high quality. There are periodic delays, some inaccuracies, and people have this need to raise disputes to correct this information gap with bureaus. The current process as of today is not a very user-friendly one. Bureau websites are not the easiest to navigate. So we have built a layer on top such that they can raise disputes easily across all bureaus and manage it more effectively.
Very, very interesting. Seems like a large market, a severe problem statement, and solution does seem very, very unique. And in fact, we were also, looking to find global analogs to what we are building. But it's a very, very unique and first principle, driven solution that we have built. And at least, Sanchit, we felt that, it was your customer obsession which has led to the suite of offerings that we have today. But would love for you to talk about your overall vision for GoodScore in the years to come.
So, see, our overall vision is quite simple, Mayank. As I said, this is a very large market of people who have gone through tough times and are now looking to recover. However, if you see, everyone who is operating in this market is largely operating lender backwards. Everyone is serving the lender. There are tons of collection agencies, tons of new age collection agencies, but there is nobody who is borrower focused. So I think that is our primary vision. We want to be serving this market and be a borrower focused company and solve everything for this borrower such that they can eventually come out of it and lead a good financial life that is largely what we want to go after.
Very, very interesting. Seems like a clear white space. And Sanchit, last but not the least, I think we were fortunate enough that when we led your seed round, at least by and large, you signed with us, and then potentially spoke to a few investors to get them as a co-investor. But would love to understand that why were we so fortunate? Why did you pick us during the seed round?
So Mayank, I think it was not a very difficult choice. I had been in touch with you, Ritesh, and other people in the team for quite some time. Had spent a lot of time talking about what I wanted to do, and felt very good about that time and about how my interactions went with Stellaris. And I think as an entrepreneur, what you need for seed investors from a seed investor is probably an open mind and a lot of support for you as an entrepreneur. And I could get high conviction during that period I was engaging with you, Ritesh, and other people in the team. So it was absolutely a no-brainer for me as I narrowed down on this space, and basically was a very natural choice.
Chaliya, I think we were grateful that you chose us as partners in the journey. Thank you so much again, Sanchit, for doing this.
Thanks, Mike.